Okay, welcome everybody to this evening's ACY Securities webinar. Tonight's webinar is how to use the MACD indicator in a bull and bear market and identify divergence. So I'll take you through how to use the MACD indicator. Tomorrow evening will be more live market analysis from myself, 7 p.m. Just go over to the webinar page and register your interest if you want to join me tomorrow. And before we get into tonight, those coming on board, if you can read through the disclaimer. All right, move along. The disclaimer will be coming up again. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. Been trading the Forex market almost for 20 years now, mentoring for more than 10. If you want to contact me, my email is on screen there, duncan.cooper@acy.com. Through the week, you can connect with us at the website, acy.com, go to the Market News tab, or our YouTube channel, which is at ACY Securities Australia. And if you want to connect with me personally, just head over to my Linktree page. And as we're going through these webinars, you can get access to the chart layouts and templates that I'm using. So just contact Nathan Bray for that. His email's there. I will put his details in the chat later when I give you access to tonight's presentation. So let's just keep moving along. All right. Just bringing up tonight's presentation. For those just coming in, if you can read through the disclaimer before we move along. So just shout up if you have any questions as we're moving through. We'll look at some examples using MACD in this presentation, then we'll go to the live charts and put it into a live perspective. All right, let's move along now. So we're going to go through these topics and then we'll go to the charts. So let's talk about the MACD indicator. So the MACD indicator is a trend following indicator. It can be used to confirm the current trend. However, like all price-based indicators, it is lagging and shows a historical representation of the trend based on historical price action. Okay. You can use divergence maybe to foretell that we might be getting a change in trend, but all indicators are always an historical viewpoint of the trend. So you need to understand that. So on my chart, you'll see the MACD indicator at the bottom of the charts, and it consists of a blue line and a red line. MACD line is a blue line, and the red line is called the signal line. And the vertical blue bars that you can see called the histogram. And all the histogram is showing you, bringing my mouse on here, it's showing you the distance between the two lines. All right, if I get my drawing tool here. This tall line just here is that distance just there. That would be the exact same height as that, okay? So it's just a representation of the distance between the two lines. So if you're not sure whether the two lines have crossed, then have a look at, for example, this little bar just here, which I'll just draw in. So when you're looking down here, it's telling you that that's crossed because that little gap there, that measurement of that little gap there is that height of the bar just up there. Okay. All right. So when the blue MACD line crosses above the red signal line, the trend is up on the time frame that you are looking at, okay? That's what you would glean from the indicator. Trend is up when we're crossing up, and the trend is down, it's turning down when we're crossing down. What you'll find when you're looking at the charts with price as well, price will have already probably started to move up or down with these crosses. As I say, the indicator is historical of what price action's been doing. All right, and as I was just saying before, the histogram measures the distance between two lines. So let's talk about MACD trend. The MACD indicator can be used to confirm the trend on any time frame that you're looking at. The MACD indicator does lag, especially on the higher time frame charts. Price will have changed trend before the MACD crosses and confirms a change in trend. Right, so on the weekly chart here, what you'll see is I'm just highlighting where the significant tops and bottoms are, and then we can look at where MACD crosses. This is where price tops, but price doesn't cross until many, many weeks later. All right, we've already started to form here a lower top on the weekly chart before the cross occurs. But what I glean from, say, a weekly time frame using the MACD is once we do cross, we usually get a sustained trend for quite a long period of time. Okay. Then we get a low coming in here. Again, there's many weeks here before the MACD crosses up. But again, once we cross up, there's a long time and an upward move before the trend ends. And if you just study the chart, you'll see the crosses are always coming later than when the turn occurs. We turn down here, cross here, turn up here, but we don't cross up, at least 3 or 4 candles later before we cross up or down. In some instances, it's many more candles before we get the cross. All right, on day charts, you'll see that the crosses are coming in quicker, but they're still after the top, we get the cross. After the bottom, we get the cross up. After the top, we get the cross down, but they're coming in maybe a little bit early on a day chart. Bottom comes in here. But again, it's 2, 4, 6 candles later before we get the cross up. But again, taking this example here, once we get the cross down, we get a sustained long-term decline. So when we're dealing with a weekly chart and a day chart, once we get a cross, we usually get quite a long-term move the opposite way or in the direction of the cross once it occurs, okay? Once we get across, it's not like we're going to be crossed down for 2 days before we cross back up. It's usually a sustained move. For our chart, again, you're just going to see it is delayed. What I tend to do with the 4-hour chart is if I'm seeing a very strong downtrend, and I'll just use this bottom one as an example here. We have a sustained downtrend here, or maybe we're coming down to an area of support from the higher time frame. But we're coming down quite strongly. I won't just get long here potentially because I think support will hold. If I'm in a sustained strong trend down or up, in this case down, I will actually wait for the MACD to cross up to tell me that, okay, we're putting the brakes on down there at support. And now I need to look for a reason to go the opposite way. Okay, so if I see price screaming down, I will wait for the MACD to cross up before I look to engage to get long. If I see price screaming up on the 4-hour chart, I will look for price action to put the brakes on. I will look for MACD to cross down. So over here, for example, where we're screaming up, very strong trend up here, and we're maybe coming up to this area of resistance. I will wait till the cross comes in. So the cross is here before looking to then look for a setup to go short. All right. So that's just indicating where the cross comes in. And, put other things in perspective of the tools that we've been teaching. I might be, looking for this to fail up here. I see a MACD cross come down. And then I may be looking for maybe a failure up here on a retest, a 79% retracement. But what I would like to see as well is that I've had the confirmation of the MACD crossing down, because that's telling me that the upward momentum that we're seeing coming up this way has come to an end, because this is now crossed down, because now the momentum is shifting to potentially the downside. All right, so if I'm seeing that the momentum's ended on the 4-hour chart, then I get a lot more confident about going, okay, now I'm going to go maybe take an aggressive entry to the downside. Okay. All right. 1-hour chart. Again, you're going to see the crosses are coming in after the turns. And when you get periods of sideways action here, the MACD is very unhelpful. Okay. It's a lot more helpful in trends coming to an end, turning around and moving back the opposite way. But when we're in a sideways market, you just continue to get crosses, and it's not very helpful at all. All right. So if you study these charts, you're just going to see that the crosses come in later than the turn. And in sideways markets, like through this period here, not that helpful through this sideways area here, because all you're just getting crosses up and downs. And whilst I was drawing it in there, there's 2 areas of consolidation there, just to show you. But really, you want to go to, these are just some examples to discuss, but you want to go to the live charts and start to watch how price action does its thing. And what does the MACD do? And is it helping you determine where you should be engaging in the market or not? I tend to use it on the higher time frames personally. I like to see, if I think we're coming to an end of a run on a day chart, I like to see a cross down first before I want to go the opposite way. Same on a 4-hour chart. If I see a cross on a weekly chart, I'm probably going to start to think we're going to get a long-term move up or down from that cross, because that's normally what will occur. All right, so when a trend line break, this is just to put into perspective some of the things we've been learning, and I'm going to take you through a setup using a trend line break. I'm going to be using MACD and a trend line break in the setup. So when we're looking at a 15-minute chart, when a trend line break occurs on the 15-minute chart, we'll use the MACD indicator to confirm the start of a new uptrend or downtrend. So I'm going to be using a couple of tools on a 15-minute chart later on in another webinar, putting some tools together to confirm that we have a trend change. So if we get a trend line break to, say, the upside, and the MACD's crossed up, those two things are confirming each other, that the trend's turning up, and vice versa if they're crossing down and we get a trend line break to the downside. Just to show you here on a chart, here we get a trend line break to the downside, MACD's crossed down, and then we get a movement down. Okay, and what I would say about the histogram showing the distance between the two lines, as the distance between the two lines is widening, what that is telling you is that the momentum of the trend, which is down here at the moment, if the distance of the lines is widening, the strength of the momentum, the trend to the downside, is growing at that time. When the lines start to narrow, then the trend is starting to weaken. The momentum is weakening, okay? Right, so we get a cross down here, break of the trend line, and MACD crosses down. You can use that as a trigger to get in. The bottom of the market here, we get a trend line break to the upside, MACD crosses up. You can use that as a trigger to take an entry to the buy side. So I will use that as a mechanism on a 15-minute chart. I don't use that as a mechanism on a higher time frame chart just to get in because we've got a cross, but I use it as a trigger on a 15-minute chart. All right, let's talk about MACD divergence. So divergence is when we have a disagreement between price trend and the MACD indicator trend. Positive divergence is when price is making lower lows, but the MACD indicator is making higher lows. And negative divergence is when price is making higher highs, but the MACD indicator is making lower highs. Divergence came with a signal that price is moving in the wrong direction. So even though price is still continuing in the direction of the trend that you've been seeing, when you start to see divergence, it can be an indicator that very soon price may well move the opposite way. Divergence on the 15-minute or 1-hour chart may be a signal, or may signal a good intraday change in trend. And divergence on the 4-hour or day chart may signal a complete change in trend on the higher time frame charts. Okay, so the strength of divergence, 15-minute or 1-hour divergence may just be an intraday change in trend, not necessarily a long-term change in trend. But if you see it on the higher time frames, 4-hour day chart, you could get a complete change in trend when you start to see that. And I think I've got an example of the 4-hour chart from last week on the euro dollar, showed you where we topped out last week for that good, I think, almost 300 pip move down. So divergence is more effective when it is occurring at a high time frame support or resistance level. So when price is moving up, if you just see divergence, if it's not occurring at a significant level of support or resistance, it could just be telling you that the trend is just lessening. So there's always a higher chance that we're going to get a significant change in trend when we're seeing divergence if it's happening at support and resistance from the higher time frame charts, because it's at a known previous price turning point. All right, so here's a day chart example. We've been obviously moving down here. Now we're moving to a lower area from the previous area here, but the indicator's putting in a higher bottom. So that is called positive divergence. All right. And we've kind of put in 3 or 4 bottoms here. And then we move up. For our chart, move to a lower point, but we actually put a higher point in on the indicator. So that's again positive divergence. And then you can see we move back up the chart. On our chart, move to a lower area on price, but a higher bottom on the indicator. And you can see we move back up. Of course, here, this moving back up on the 1-hour chart isn't as far or strong as what we've been seeing on the other charts, the higher time frame charts. 50-minute chart here, we come down just to a lower point, but the indicator is a higher bottom. And then we get a trend line break. MACD crosses up. You could be looking at this as an entry point here. And of course, we move up and we move up into the next day as well. But of course, here we move up to there, but then it goes a bit sideways and we move down. So, really the movement from this divergence is only from, is only this kind of price action to take your profit on. So it's just a move, the whole intraday price action on this particular day is from that point to that point. So it's just showing you a reversal and an intraday move back up the range. Right, let's look at negative divergence now. Here we go up to a higher top to the previous top, but the indicator is not following, puts in a lower top area, and price starts to move down. Don't know where it actually finishes to, because that's where the chart cut off at the time, but you can see we get a change in trend there at that point. For our chart, we move to a higher point to the previous area, but the indicator doesn't follow. That's a lower top. And we move down. I say this all the time when I do this webinar. In areas where we're sideways, if we try to break out the consolidation and then we can't, and you see divergence, in this case happening at the top, we'll often then break out of the consolidation to the downside, and the opposite, if we're seeing the opposite scenario with, right, that's negative divergence, but if it was positive divergence, where we false break the bottom of a range, then we're probably going to come up to the top of the range and break out. Because if we get a false move to the upside, we could be breaking to the downside. Again, move to a new high, but the indicator doesn't follow. And again, this is a kind of an area of consolidation. So we false break to the upside, we see divergence, and then we break down to the downside. We're on the 50-minute chart, move up to a high point here. We've got divergence as well. Here we actually hit the figure. I've been through the figure in a webinar before, saying that it's a very good area to watch for resistance intraday. Trend line break, MACD crosses down, and then we get this movement down. So here we're coming up to a higher point to that point, but the indicator is putting in a lower area. And then we move down intraday. Next day, we do the same thing. Here we're in the red zone on the pivot points where it's a resistance area on the chart. Higher point to the last point. Indicator doesn't do the same thing. It's a lower top. There's your trend line break. And price moves down intraday. All right, so that's the end of that module. I'll give you that so you can review those charts. And I'll give you Nathan's contact details too. All right, let's go now jump into the charts and see what's happening on some of the major pairs. Let's get into the euro dollar. And we'll start from the weekly chart. Now the trend on the MACD is down. In fact, we've got, I would say, relatively nice, what we call angle and separation between the two lines. And where's the price trend? Lower top, lower bottom. A very strong week down last week. Trends down on the MACD, okay? You can get divergence on the weekly chart. Previous times. And, once we get a cross down, so the cross down occurred around about that candle close. And then we had 1, 2, 3, 4, 5, 6, 7, 8 weeks, so 2 months of a decline there from weekly divergence and the cross down. That's what I'm saying. Once you get cross down on the weekly chart, you usually get a sustained trend. Okay. What we've seen over here when we got that cross down there, so that cross down happened here. We did move down. Then we had like a 62% rally to put in the lower top. And this didn't come up and cross, but it's been remaining down, and now we're continuing down. All right, so long-term trend there on the MACD and price action there is all down. And we also got weekly MACD divergence up here. That was a major turning point in the market. And whilst we got some obvious crosses up coming up through this whole movement down, you can see the long-term decline from that divergence that you're seeing on the weekly chart. All right, day chart. This movement up here, the end of the year, of last year, we had divergence. this movement up this way, cross occurred about 2 weeks later when this low came in, and then that's quite a long time of at least 2 months, if not 3 months of price action going up there. Next cross came in around about here. We did come back up there and had a cross, but at the moment, very large distance between the two lines, good angle of separation. Price trend is quite clearly down to a lower bottom at the moment, and we might come up here on the day chart. I might just have to backtrack. I may have said weekly at some point when I was on this time frame. This is the day chart, so I may have said 2 or 3 weeks here. This is 2 or 3 days when the cross occurs here, and I may have said 2 or 3 months. So this is more like probably a month of price action here. All right, so I'm just correcting myself. This is a day chart time frame, so about 2 or 3 days to cross up, maybe 4 or 5 days here to cross down. And this is maybe the best part of a month moving back up here. Right, so the day chart at the moment, trend is quite clearly down. MACD's crossed down. If I was looking at that from a pure trend perspective at the moment, I would say, okay, price could rally back up for 1 or 2 days, but nothing is telling me that we are bottoming out at the moment if I'm contrasting price action to the MACD. All right, we might get 1 or 2 days coming up. Might come back up to broken support, being resistance, and then maybe a continuation of that day chart trend down. All right, to the 4-hour chart. Now, at the moment on the 4-hour chart, we are now crossing up. Price action, if we got a long-term downtrend on the day chart, and I see a cross up on the 4-hour chart, because don't forget the day chart trend structure is down, is this may only be alluding to the idea that we may get 1 or 2 days up. It's not necessarily alluding to the idea that we're going to get 2 or 3, 4 weeks up. The overall trend on the day chart is down. No cross up being seen. All right, so this is just telling you we're getting a bit of a pause in the momentum to the downside, and we may come up 1 or 2 days at the moment. Or what can often happen is we might go sideways here. Let me get my drawing tool to work. We may go sideways here for a period. This will come back up, and then this will come back up. These 2 lines come up, and price action will be going, can go sideways, and then that will turn back over, and then price action will continue with the trend. All right. Now, when we were coming up for this period up here, over the last couple of weeks, and we topped out up here last week. We go back to the day chart. Really, just adding some tools in here. We came up to a 62% area here. All right. We actually came up to a known area of resistance to the left. All right. And then last week, when we're in this area, we started to, think about maybe, are we topping out up here? What happens on the MACD? We do come up to a higher top here. We're actually putting railroad tracks. So there's a candlestick pattern there. At your day chart resistance, closing back below the 62% level. And we see on the MACD here that we're getting divergence. So what's on the day chart, all we're seeing is the day chart. This is price action. All right. So that movement down there is here. coming up on the day chart to there. So when you're looking for the lower top to form here on the data chart, your 4-hour chart is starting to show you divergence here, telling you that we're at that 62% level here. There's your 62% level. We start to turn around here, divergence showing. So for myself personally, I'll be using the information from the MACD to try to ascertain on the 4-hour chart where this lower top's forming on the data chart. I'm not trying to pick the bottom area. I'm trying to pick the rally area within the trends. So at the moment, price has moved down on the day chart. This is the day chart here. And potentially we're going to have a rally at the moment, maybe, before the next decline. All right, so I would let this come up and looking at the 4-hour chart, turn over to confirm the next lower top coming in at some point. I don't use it to confirm this point to get long because the trend's down. So I'm using it to confirm a point up here to turn back to down and use that as a confirmation, confirming tool that I want to be getting once again in line with this trend here. So what we'll have a look at as well in this area. So where we know the MACD was telling us here that, okay, we're getting a turnaround on the 4-hour chart. Let's just have a look in this area on the 1-hour chart from last week. So this is that area here. So what were we seeing? It was maybe a fraction of divergence just here between these 2 points. All right. So we're actually seeing divergence on the 4-hour and the 1-hour chart there as we try to break higher and then couldn't. And we'll have a look at that area on the 15-minute chart. Because often what you can see is that we have multiple time frames in the same area telling you you've got divergence. So last week's topping out area. If I can, let me just put a line in so I can easily find it. All right, so here we are on the 15-minute chart in the same area. Might just need to squash this in a bit. So that's up here. So I don't see divergence here because price action is going up to a new high here. And so is that MACD there. All right, so I don't see any 15-minute divergence. You don't need to have 15-minute divergence, but we will definitely see it on the 4-hour, 1-hour chart that maybe we're going to get a change. And of course, you only have to now look at historical price action just to prove the point that divergence there was, if you wanted some clue last week that we were maybe going to top out in that area alongside your other tools that maybe you were using, then you could quite clearly the 4-hour chart up here was preempting that we might get a turnaround here. Or any questions on that? Let's drop into let's just have a look at the current price action. We know the MACD is crossed up on the 4-hour. 1-hour chart at the moment, the MACD is up, and actually on the 1-hour chart, price action is up. All right, so just confirming the 1-hour uptrend there at the moment. And on the 15-minute chart, price has been moving up, and the MACD's crossed up. Just confirming what price is doing, okay? Now, what you could watch for is, this is a little bit consolidatory here at the moment, is if we come up to this top today, so here's the kind of the layer of consolidation at the moment, 15-minute chart. When we were at the bottom of this area, or forming the bottom of the area yesterday, there was some positive divergence. Before moving up. Now we're coming up potentially to test the top of this area. If we were to come up today and just poke through that top, that area, and then price action shows divergence here on the indicator, that could mean that we're going to hold here and turn around to move back down to support. All right, now it's not showing divergence at the moment. Doesn't have to show divergence because when we came up to this point yesterday, there was no divergence and we came all the way back down to once more support. But if we try to break above here today, reject, and you see divergence forming, that could be a very telltale sign that we're going to not be able to move above and through, and we're going to move back down the range. All right. All right, let's have a look at the pound dollar. Just going to go through this one a little bit quicker. All right, so the trend on the pound dollar at the moment on the weekly chart, MACD trend's down, price action trend is down. On the weekly, we move to a lower area. All right. Just want to prove the point here that once you get across on the weekly chart, whilst it's delayed, it took about 4 weeks to come in there, 2, 4, 6, 8 weeks down. It's the same kind of thing we saw on the euro dollar. So we could still have maybe, another, as I said there, we had another 8 weeks down after it took 4 weeks to cross down. Here we crossed down after about 2 weeks, maybe. And we've had 4 weeks down. Well, maybe there's still another 4 weeks to go. Now, when we came up to this slightly higher top here, we did actually form just a little bit of divergence down the weekly chart. So that could be a definite strong signal that maybe we've got a major top coming in there for a major move down. This top that came in up here, slightly higher top there, there's divergence there. And look at the length of that longer term move. All right. All right, day chart. Price action trend is down at the moment. MACD's got good angle of separation. We may have, a move back up towards some form of resistance. To be resistance to continue the trend down. Could be this level. Could be this area here. All right, 4-hour chart. Trend on the 4-hour chart is just turning up. And the MACD's turned up here. And, there's maybe a little bit of divergence down here, suggesting that we're going to have a little bit of a bounce. That's the higher bottom to this price action moving down. But again, the higher time frame trend, the day chart is showing you no trend change, and the long-term trend is down at the moment. So I'm not that fussed about this cross up and a bit of divergence here. I think we're just going to come up a little bit. We may stay sideways here before further moving down. All right, 1-hour chart. Trend on the 1-hour chart is up at the moment, and MACD is just confirming that. And the 50-minute chart trend here is up. Price trend is up. Although we may be starting to see almost a trend line break, but the MACD hasn't crossed down yet. All right. So we could be seeing a bit of a false break of yesterday's high here. And, we could be moving back down to yesterday's low. So MACD crossing down and a trend line break here could be, a trigger to trade back down the range here. All right, any questions? Just let me know. Let's just go through one more. And we'll have a look at, the Aussie weekly chart. So weekly trend on the MACD is down. It's been crossed down ever since we topped out. So ever since we crossed down, which was this candle, whilst we went sideways through here, the MACD never crossed up. And we're moving to a fresh low at the moment. Day chart. Price trends down, MACD's down, good cross and angle and separation here at the moment. We might get 1 or 2 days up, but the MACD is not telling us that we're changing trend at the moment. When we bottomed out over here, drawing tool, we're seeing some divergence here before we got this swing up. For our chart, price trend is down at the moment. We, still lower tops and bottoms, but this is turning up. So I'm anticipating we're going to have a day up. From that cross up, a day up, but the overall trend is down. The day chart trend, we've broken this low here. So I think the day chart trend looks something like, these are the swings, I think, on the day chart. Down. So I'd anticipate we're going to come up. But I would be looking for a lower top to form somewhere, maybe at this area of broken support. And then on the 4 hour, as we turn over here, we're looking for the 4-hour MACD to cross back down in this area to confirm that that's going to be holding there for the next leg down. And, on this area here on the day chart, where we false broke last week, I think it was, what was happening there on the 4-hour chart? Trying to move above resistance. All right. Saw the exact same thing, very similar to what we saw on the euro dollar. So often, if you're seeing correlated pairs to the US dollar, so euro dollar, Aussie dollar, seeing divergence at the exact same time on the chart, and if maybe both pairs are at resistance, the exact same time on the chart, and you're seeing divergence on 2 correlated pairs, then let's just go to the 4-hour chart of the dollar index just to prove a point. Is we're probably seeing that's negative divergence on the 4-hour chart. They were probably seeing positive divergence on the US dollar. So for our chart, this would be in this area here. So we did get a little false break of this low because we had a false break to the upside. Little false break there. We do have positive divergence on the US dollar. So at that point last week, we had negative divergence showing on the euro dollar and the Aussie dollar. So if you're looking at correlated information and you're seeing the same story starting to happen, dollar index was telling you maybe we're going to be moving up because we're seeing some divergence there, positive divergence, and then the Aussie dollar is showing negative divergence at resistance. Euro dollar is showing negative divergence at resistance and the 62% retracement. And then, of course, we've moved up. Now, dollar index at the moment is showing cross down, and we're seeing cross up on the euro dollar, pound dollar, Aussie dollar. So what is that suggesting? That we're going to get some kind of short-term pullback at least, and then does the prevailing high time frame trend continue up? Okay. Right, so a little bit of, cross-market correlation there, or how you can look at things as well. Hopefully that's all making good sense to you. All right, so any final questions? Everybody getting across there? David asked me, what is the MACD setting? It's 12:20. It's just get my chart lists and templates, and you don't have to set anything up, but this MACD is set at inputs 12:26.9. Fast is 12, slow is 26, signals 9. If you're using MT4 without my chart lists and templates, you won't be able to use this MACD. It's a different looking MACD. All right, so just get Nathan to give you my chart lists and templates, and you don't need to set anything up, but it's 12:26.9, fast, slow, and signal in that order. Okay. All right, if there's no more questions, then I'm going to wrap it up there. But, start just following along. If you like the look of MACD, put it on your pairs, start following along. Is it telling you what's going on? Can you start to see divergence and changes in trends? I'm just showing you from last week how you could have spotted the topping out on the Aussie and the Euro there, the bottoming out there, the US dollar index. All right. I'm going to wind it up there. If you want to join me tomorrow, just head over to the webinar page for more live analysis at 7 p.m. tomorrow. Just come over and register your interest, and I look forward to seeing you there. Okay, thanks everybody. Have a great day.